Tasha, of course, you're bullish. You're bullish on Tesla in the long term. In the here and the now, the production focus, is there the demand to meet it?
Well, you're absolutely right. Our focus is over the 5-year forecast. Tesla's our top position in our ARKQ ETF. But so in terms of, this production goal, they did mention, I think if you go back to 2020, they're still on track over, a number of years to meet their 50% compound annual growth rate. I think that the fears of, margin and demand troubles are pretty overblown. Our research, we've used Wright's law to forecast Tesla's gross margins over time. And basically, for every cumulative doubling in production, you get a corresponding reduction in price. We also know that they're unveiling a new vehicle platform, which should be roughly half the cost of the Model 3 and Y. I think that could be a custom-built autonomous vehicle. That's going to help margins. It's going to give a huge bump to margins in the long term, because I think autonomous platforms could have really attractive margin structures and recurring revenue associated with them. And then, the last thing I'll add is the main story here is that EVs are growing, right? So EVs as a category grew 60% year over year, while gas-powered cars were down 7%. So that's where Tesla is. I'd be worried about traditional autos, if anything.
Are you worried in any way about the impact of Elon Musk himself on demand for Teslas going forward? Is in any way that being shown up in the demand erosion?
Yeah, Elon Musk has always been a pretty controversial figure. I'd say at a minimum, what do we have to go by? It's really Tesla's results. Again, so Tesla alone in the fourth quarter, we know grew sales by 40% year over year, while in that same quarter, global auto sales were down roughly 8%. So that's what we have to go off of. He's a cult figure. I think he's really the person to drive the company towards reaching that full self-driving goal, where you can actually launch an autonomous ride-hail platform. So we're happy that he's committed to Tesla and sticking on for that.
Tasha, I want to bring some more information, I suppose, to our audience about what you were talking about. In the shareholder deck, Tesla's talking about its next generation vehicle platform under development, additional details to be shared at the Investor Day, March the 1st, 2023. I think that's what you were saying about you suspect that is some form of fully autonomous vehicle for the future. I want to bring it back to the here and now again, because a lot of what Tesla hinted at was the problems of 2024 were largely China related. It basically talked about the production issues largely being centered on the Shanghai plant. You look at margins where they came in, you look around the narrative on ASPs, average selling price. We went to our audience, okay, and we said, did those price cuts in North America, Europe, China push you to consider buying a Tesla? These are the results, pretty clear, although I would point out they changed over the course of the day, with a good number of ballots cast, I suppose. Yes, Tesla's global price cuts have tempted at least our audience to buy. Affordability. Is Tesla too expensive right now for a consumer?
I think, so first of all, and I'm glad you showed that chart, one of the things that we learned is that since the price cuts, lead times have actually extended a bit. So we do know, we're already getting sort of initial indications of demand here. We also know that the price cuts made more vehicles eligible for tax credits. Of course, we don't actually model tax credits in our analysis. We think EVs are the solution longer term compared to gas-powered cars, regardless of regulation. I think really that's the picture here, that electric vehicles are taking share. Tesla's the market leader. They've just invested in additional capacity. They're at a single-digit low percentage points of total auto sales. So I think there's still, Tesla is, and EVs, again, still single-digit percentage of total auto sales as well. So I think, that there's room to grow in both of those.
We've got a lot of questions on Twitter for you from our audience as well. Most of them are related to Tesla's energy business. What did we learn about the energy business going forward? Will it be more of a star?
Yeah, so they did highlight the energy business recently, and again with that factory expansion, they talked how they've seen some good growth in that business. Overall, our model is mostly focused on vehicles. We think that they should, while Tesla Energy does offer a really interesting proposition to consumers, and actually we've done some work to show that energy storage combined with Bitcoin mining can offer a great proposition to even use make more use of renewable sources. But, that aside, what should you focus on for Tesla? In our opinion, it's electric vehicles and autonomy. Those are the two main stories here that I'd watch over the next 5 years.
Yeah, Tasha, really quickly, G. Munster of Loot points out that they guided to around 1.8 million vehicles for 23, which if you track a 50% compound annual growth rate, doesn't make any sense based on last year's number. Do you see what I'm saying?
So last year, year over year, it does fall short of that 50%. But if you go back to 2020, you'd still be coming in over that, few year period with the 50% growth rate. So I think that's what they meant in their press release. Of course, I'm sure a lot of people will harp on that figure. But again, I think longer term, the story is electric vehicles are here to stay. And I'd be really worried if I was Ford or the other traditional auto manufacturers where the majority of their install base and the vehicles that they sell are gas-powered cars, which we see declining. That's not going away.
Right.
And by the way, they don't have a great autonomous solution either. They killed that project. So I think that's where the concern should be focused here, on the traditional auto market.
Tasha, the other question from our audience for you is, what does Elon Musk have to say on March the 1st at the Investor Day to convince us of that future that goes beyond Tesla just being a car company?
Well, like I said, I'm excited to hear more about the autonomous vehicle. They had said that they would mass produce a purpose-built autonomous car in 2024. We think that this could totally change Tesla's business model. Our price target for 2026 split adjusted is around $1,500 per share. I think over 60% of Tesla's enterprise value, could be attributable to that autonomous ride-hail platform. I think it'll have attractive software-like margins. It'll become a recurring revenue stream as opposed to, one-off vehicle sales that we see today. It's going to totally change the game, and they're way ahead. We see that they have nearly 1 billion miles driven in full self-driving beta. They have millions of cars on the road collecting data. That's much more than competitors.